The collapse of the fiat money system is upon us. We have a saying on Wall Street that stocks climb the escalator and then fall down the elevator shaft, right? Is the pattern of a stock price. Well, here, we've been climbing a while with this post hard money world until we've now entered the dropping down the elevator shaft moment. But none of these economies that are fiat money based are going to survive. None of the central banks will survive. And we're entering into a new historical period led by El Salvador, just like the United States led after World War II. Today, in the Bitcoin era, El Salvador is the new beacon of freedom, the new land of the free, home of the brave. It's here, not the United States.
Max Keiser believes we are on the brink of an economic collapse that has been brewing steadily for years now. Max Keiser is truly an OG of the Bitcoin community. Once a financial analyst and reporter, Max first bought into Bitcoin in 2011 with his first purchases made when Bitcoin was just $1. In his latest 2 interviews, he warns that we may be a few short months away from witnessing a financial disaster play out globally. One thing is a fact. Every fiat currency over the course of human history has eventually inflated away and collapsed into nothing. Keiser also speaks on the entrance of BlackRock and big financial institutions into Bitcoin via the coming Bitcoin ETFs. Although the ETFs provide an entrance of trillions of dollars worth of capital to Bitcoin, Keiser also points out that institutions were able to manipulate prices of gold when an ETF was approved. Although it's not guaranteed, Keiser warns that this is something to be mindful of as players such as BlackRock enter the Bitcoin space, as it may not be all good as it seems. Make sure to stick around to the end of the video where Keiser breaks down why in his eyes, Bitcoin is inevitable. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's Max Keiser with his 2024 Bitcoin outlook.
Right. So in 1971, the world went on an all fiat standard for the first time in history. It was an experiment. No currency anywhere would be backed by gold or anything like that. It was all fiat money. And so the kleptocracy, the kakistocracy, the worst amongst us became powerful, and they print a lot of money for themselves, and they engage in decadent wars of convenience and all kinds of social unrest. And they create a dystopian nightmare with all that free money that they print for themselves. And we have in 2009 the appearance of the counterbalancing force to all of that. We have Bitcoin. And part of the reason why El Salvador is the success that it is today is because they made Bitcoin legal tender. And when you make Bitcoin legal tender, it also means that you're bringing with it the ethos of Bitcoin, the aesthetic beauty of Bitcoin, the liberating factors associated with Bitcoin. Here's one simple fact about Bitcoin to help people put it into context. Bitcoin allows anybody of any wealth status whatsoever, from the poorest in the world up to the richest, to secure their property for virtually no cost. This is something that's never happened before in history. And what we have before Bitcoin is that the people who have a lot of money tend to prey and confiscate the money from everybody else. But everybody has no cost way to store their property in Bitcoin, and it's impossible to get that property from them. That's a game changer. That's the first time in humanity that's ever happened. The collapse of the fiat money system is upon us. We have a saying on Wall Street that stocks climb the escalator and then fall down the elevator shaft, right? Is the pattern of a stock price. Well, here, we've been climbing a while with this post hard money world until we've now entered the dropping down the elevator shaft moment. But none of these economies that are fiat money based are going to survive. None of the central banks will survive. And we're entering into a new historical period led by El Salvador, just like the United States led after World War II. Today, in the Bitcoin era, El Salvador is the new beacon of freedom, the new land of the free, home of the brave. It's here, not the United States.
Well, it was inevitable, of course, that Wall Street would get into Bitcoin. And, my background is mostly in Wall Street. So my introduction to Bitcoin and the way I saw Bitcoin from the beginning was from that perspective. So I wasn't coming to it necessarily from the technological front, and I wasn't coming to it necessarily from the philosophical angle. Mostly I saw it And my first question back in 2011 was, is this an asset class? Because if it is an asset class, if it's a new asset class, then the potential is enormous, because there's 100 trillion, $200 trillion worth of investable assets around the world, and they're very competitive with each other. The hedge fund industry, the private equity industry, they're extraordinarily competitive, and they're all looking to, get the edge on the other guy in the industry. And if Bitcoin enters that arena as an asset class, and you have hedge funds starting to outperform based on their Bitcoin position, you're going to have this huge groundswell of capital moving into Bitcoin. And I think that's the stage we're at now. So when a BlackRock or some of these other big funds, Paul Tudor Jones was, I think, probably the first hedge fund to mention Bitcoin in a big way. And so when it becomes recognized as an asset class, and if you listen to Larry Fink and these people on Wall Street, they, the phrase that they use will be, well, we see it as an asset class. So that's like a green light that says, we, once it's categorized as an asset class, we have nothing to do except position ourselves in this asset class. Either we're going to be a small position or a big position, but we cannot ignore it. We cannot not have a position. And so even 1% of that multi-$100 trillion funds available, moves the needle on Bitcoin. It moves it up considerably. So if you get into the 5 to 10% range, and then you start to see it really race ahead to those very, very 7-figure type predictions that people have been making, including myself, for years, because it is an asset class. Now, on the flip side, you have what we saw in the gold market, which is that the ability to control price discovery and manipulate prices is real through the derivatives market. So the price of gold has been lagging inflation for 20 years because the governments around the world don't like gold making their fiat money look bad. So they make it easy for huge funds to manipulate the price of gold and to scalp and to continuously skim profits off gold, which is what they do almost every day. You can watch it and see it. It's pretty clear. And they are very good at keeping the price of gold and silver down. There are something like, for every ounce of silver, there's probably 50 ounces worth of derivatives floating in the various exchanges around the world that are used to keep the price of silver down, because governments don't want gold to race ahead and to draw capital out of their fiat money scam into gold. With Bitcoin, we have the ability to pull our private keys, which is not really available in gold. Technically, people can take delivery of gold on these exchanges, but there's never been an organized attempt to do so. We tried to do it a few years ago with crash JP Morgan buy silver, because after the 2008 financial crisis, when JP Morgan ended up buying Bear Stearns effectively for nothing, they inherited this huge multi-million short silver position that Bear Stearns was managing at the behest, presumably, of the government. The government likes to stay involved. And so I did some calculations, and it became clear that if this short position wasn't covered, and the price of silver got to $60 or $70 an ounce, it would bankrupt JP Morgan. So we started this crash JP Morgan buy silver campaign, and we got the price from 15 up to 50, which was the old the Hunt brothers. The Hunt brothers got a price up in the 80s into the $50 range. They were cornering silver. So we got it back up to the old Hunt brothers $50 level. And then the feds, of course, came in and they changed the laws overnight to make it possible for these banks to have and carry much greater short positions in silver. So they printed up a lot of paper silver derivatives, and they stopped the run on their bank, and the price went back to 15 or so. So we've seen that it is possible to force capitulation in the silver market. But at the end of the day, because the ability to pull private keys is not like it is with Bitcoin, I don't think it will ever succeed. Whereas with Bitcoin, you can pull your private keys, and that is what the late great, I shouldn't say late, but the former Bitcoin superstar Trace Mayer started a campaign that on January 3rd of every year, people would pull their keys off exchanges as a way to maintain integrity and to prevent these derivatives bubbles from building up to excessive price manipulating levels. That was, just to give a shout out to Trace. I mean, before, Michael Saylor, everything Michael Saylor says about Bitcoin in terms of an asset class, Trace Mayer said first, starting, he was a buyer of Bitcoin at
Definitely.
25 cents, and going back to 2010, right? And then he's another example of somebody who disappeared, one of the OGs who disappeared, and that's kind of an interesting story as well. But you're right that when you have huge money in these markets, they have the ability to manipulate price. And but a couple of things I think with Bitcoin, because in order for the gold suppression scheme to work, you really need cooperation amongst all the bullion banks. So there really is a gold cartel. And the risk, of course, whenever you have a scheme like that, is that you have, if you're short, obviously you have a risk on the upside. But with gold, under the best case scenario, even let's say a war is started, and we've already had a couple of examples of that. It didn't really have much of an impact on price, but I mean, we're saying the price maybe could jump 10, 15, 20% with gold. You're risking 10, 20% on your short position to skim, 1% every couple of days in perpetuity, right? So that's a risk these banks will take. But with Bitcoin, you really, if BlackRock or the Saudis or somebody came in and said, we're putting an order in for 500 billion Bitcoin, and the price goes from 30,000 to 120,000, that's a huge move, and you're going to get wiped out if you're short. And so it's going to be difficult to maintain an anti-Bitcoin price suppression cartel, because the upside is just too incredible. It's you're talking millions of dollars a coin. And so there will always be at least one of these players to drop out of the cartel. You won't be able to get a cartel organized. So that's one thing that Bitcoin has in its favor. Additionally, it's easy to pull the keys. And then thirdly, you just have in the background the ongoing collapse in fiat money world. I mean, the fiat money world is really at the end of a 300-year period or experiment, going back to the creation of the Bank of England, and this idea that fiat money could work. I mean, we know after 300 years that it never works. They all go to zero. None have ever survived, or they're lost 99% of their purchasing power. So I think we're entering a new epoch where the fiat money is going to be history. The CBDCs that are coming up by central banks are just an attempt to reinvent fiat money, and it's not going to compete with Bitcoin. People are going to see Bitcoin as the path away from centralization, CBDCs, and everything else that comes with it, and they're going to continue to embrace Bitcoin as a way toward economic freedom and just freedom in general.
So there's Max Keiser, a true pioneer in the Bitcoin community, highlighting the potential risks and rewards in the current economic climate. His perspective on the imminent economic collapse, a situation brewing for years, is a crucial wake-up call for everyone watching. Keiser's commentary on the entry of major financial institutions like BlackRock into the Bitcoin space through upcoming ETFs is especially noteworthy. While this move signifies a massive influx of capital into Bitcoin, it also raises concerns about potential market manipulation, drawing parallels to what happened with gold. This is a reminder that in the world of finance, every opportunity comes with its set of challenges. As we've heard from Keiser, despite the potential pitfalls, Bitcoin's role in the financial system seems inevitable. His cautionary yet optimistic view provides a balanced perspective for anyone interested in the future of finance and cryptocurrency. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.